Okay, so hello, Assalamu alaikum students. This is your teacher Azka, and I teach accounting and business to O levels and A level students. Okay, so students, we do have a topic for today, and the topic is basically over and under absorbed overheads. So basically, this topic is linked with our previous topic. So maybe you remember our previous class, which was about absorption costing. And we learned that how to make uh, this sheet. Maybe you aware, maybe you know this if you watched my previous video. So we were talking about the overheads analysis sheet. Basically, in this sheet, we know that how to calculate the 4 steps of absorption costing. And at the end, we have amount when we add allocations, allocated direct materials and direct labor. And after we do have some other numbers, which is related to apportionment. And when we add these three, so we have 3,000 and 3,000 amount for both production department, and this is called our budgeted production overheads. And after that, we learn that how to calculate the absorption rate. And there are so much there is a formula related to overhead absorption rate. If we want to calculate the overhead absorption rate, so we do have a formula for it. And formula is budgeted production overheads divided by budgeted activity level. Okay, so this is our formula. So where we can find a budgeted production overheads basically from our overhead sheet analysis. This is our uh this is basically no okay. So okay, so this is basically our production overheads. And we know that these are our production overheads, all the fixed overheads and direct material and the direct labor, which may be occur while manufacturing different products in a factory. But do you know that this is forecasted amount? So that is why we call it budgeted production overheads. So this is basically forecasted amount. This is basically overheads, all the overheads, which maybe it is related to rent and rates, heat and light, and direct labor and direct material. These all are basically forecasted amounts. And of course, when we are going to calculate our overhead absorption rate, so the budgeted activity level, which may be given by the examiner in your exam, so it will also forecasted amount. So it means that these all overheads in real, it doesn't occur, but a company may be forecast these amount at the earlier stage of production. Earlier stage, or maybe you can say the start of the year when production starts. Okay, so why this is happening, like why we are, you can say that companies and factories, why they are forecasting these amounts, these overheads. Basically, they are forecasting these amounts because they want to know the cost of production so they can quote the selling price to the customers. For example, uh, yes, this pointer would be, I think this color would be, yeah, it is prominent. Okay, for example, a company A, for example, a company A, maybe company is making cars, trucks, into their production department. So, for example, a customer maybe came over to our factory or maybe our company to our outlet, and he asked the price of this car. He asked that, what is the price of this car? Okay. So we cannot we cannot um, tell to our customer that okay, you can come after after the 1 year, so we can tell you that what is the price of our car, because if we want to know about the price of our car, we should know about the cost of this car. Okay, so that is why when company is supposed to manufacture, for example, company A starts its year in 2018. So in this year, basically, they are producing cars. So they don't know that maybe after 1 year, like at the end of the 2018, they don't know that what are their total production cost. So that is why what they do, they just forecasted all the overheads. They just forecasted all the overheads. They forecasted the direct labor. They forecasted the direct material, and of course they forecasted their fixed overheads. All these amounts basically forecasted by company. And we have to forecast it. What's the reason? Because fixed overheads may be changes by the passage of time. And it is because of this also, like in summer season, we all know that bills of electricity suddenly goes up. Okay, so we don't know that after 1 month, maybe we will have 1 lakh amount of electricity bill, maybe more than this. So how do we know this? So for that reason, companies forecasted all these amounts. Okay, I think you got my point. So that is why they are like forecast all these amounts. So because these amounts basically fluctuates with the passage of time. Maybe the material company A using to produce its car, maybe this direct materials prices goes up, prices will not remain the same. When inflation rate getting higher, it means that your prices of raw material will be higher also. Okay, so that is why company just make some you can say that assumptions, or you can say the budgeted amounts, so they can quote the exact price of the car to the customers. Okay, so I think you got my point. Okay, so what happens basically, so here this concept comes, over and under absorbed overheads. So you can see I just put a question here, and question is about, of course, over and under absorbed overheads. So basically, you can see that there is overheads, budgeted overheads, which is 100,000, and there is activity level. Activity level, like there are a lot of activity level. It could be labor hours, it could be machine hours, it could be direct material cost, it could be per prime cost. So like I already have told you about this, the different types of activity levels. Okay, so we have budgeted overheads, which is 100,000, and we have also activity level, which is 50,000 labor hours. Okay, so these two amounts basically are, you can say that forecasted amounts. But after 1 year, or maybe when you can say that you converted your raw material into fixed, sorry, not fixed, basically into finished goods. So after that, you will come to know that your actual amount is totally different from your budgeted numbers. So this is your actual overheads and your actual activity levels. So this is happen whenever whenever um, your budgeted activity levels, or maybe your overheads have been charged, more overheads have been charged than actual incurred. So it means that it is called over observed overheads. And if less overhead have been charged than actual incurred, so it means that your absorbed overhead is under absorbed. Simply means, you suppose that your budgeted overheads would be 100,000, but your actual is 1,30,000. So there you can see that there is a lot of difference. There is 30,000 difference basically. And you forecasted that your activity level is 50,000 labor hours, but um, in real, your actual activity level is 7,000 labor hours. So you can see that there are a lot of difference in both amounts. So in that case, we have to find the over and under absorbed overheads. So we have a formula for this. So here is a formula. If examiner, maybe examiner would give you these four amounts to you, like the budgeted overheads and activity level, and actual overheads and actual activity level. So they will ask to you, the examiner will ask to you that find the over or maybe under absorbed overheads. So what you can do is, you can use this formula, which is over or maybe under absorbed is equal to actual overheads minus amount absorbed. So we know that our actual overhead is basically 1,30,000. But you have to find the amount absorbed. So for this, you have another formula. Amount absorbed is equal to OAR, which is basically overhead absorption rate. And you learn this thing to calculate in your previous class. You will divide OAR, multiply your OAR into actual activity levels. So first of all, you have to calculate your OAR. So maybe you remember the formula of OAR. The formula of OAR basically budgeted production overheads divided by the 50 activity level. So it means that we have to divide this overhead to this activity level. So we get to know that our OAR basically $2. It means if our labor works for 1 hour, so they will you can say that their cost, or maybe their fixed overheads will be $2 per hour if they work for 50,000 hours. It means that if your budgeted overhead is 100,000, and if your worker maybe work for 50,000 labor hours, so it means that it will cost you $2 per hour. I hope you get my point. But in real, it is totally different. You can see. It is just forecasted amounts. Okay. So the formula is OAR, which is $2. I just calculated, which is $2. And your actual activity level is 7,000 labor hours. Okay, so we get to know that our amount absorbed basically 14,000. Okay, so we just put this amount to here, because basically we are finding the over and under absorbed overheads. And the formula for this is actual overheads minus amount absorbed. So we just find this amount 14,000. This is our amount absorbed. So we just put it there, and according to formula, we are going to minus amount absorbed from the actual overheads. So this is, we know that our actual overhead basically 1,30,000 minus amount absorbed is 14,000. So we have basically 16,000. We have $16,000 answer. So what it means? If your answer may be in negative amount, so it means that your overheads basically over absorbed. And if you will get a positive answer, so it means that your overheads basically under absorbed. So what is the meaning of over absorbed? Means that your absorbed amount, like your forecasted amount, your budgeted production overheads is greater than the amount of actual cost of production. And under absorbed means that your absorbed amount, like your forecasted production overheads, basically less than the amount of actual cost, actual overheads. So this is the main difference between both over absorbed and under absorbed. Okay, so what are the consequences of it? Like if we mistakenly over absorbed our overheads, and if we mistakenly under absorbed our overhead, so what is the main problem which we will have to face in the future? So the problem is that if you are over absorbing your overhead, it means that you are overstating your cost of production. If you are overstating your cost of production, it means that you have to increase your price also. I just want to give you a more like example. For example, you forecasted that your overheads are 100,000. Not 100,000. I think I should write the little amount, because this is just an example. Okay. For example, you forecasted that your overheads for this year may be 100. Okay. So if your overheads is 100, it means that you will charge a high price on it. Maybe you want to get $10 profit, so it means that you will set a price of $110. Okay. But after 1 year, you get to know that your overheads was not basically 100, it is basically $90. Sorry for the inconvenience. Okay, so after 1 year, you get to know that your overheads, your actual overheads basically less than your forecasted overheads, which is 90. So it means that according to your forecasted overheads, you are maybe charging a high prices to your customer, whereas other businesses maybe they are more wiser than you, maybe their forecasted amounts, their forecasted production overheads may be more accurate than you. It means they are charging very less prices, but because you just forecasted wrong production overheads, so that is why you are charging high prices to the customers, because basically your actual overheads are $90, but you forecasted wrong. You said that your overheads are $100. So it means that if you want to earn $10 profit on 100, so you will charge 110 price, which is maybe so high for the customer. And maybe your competitors giving a low price to the customers. They are offering a low prices to the customers. So it means that because of over absorption, your prices will increase, and because of this, your demand will decrease. Okay. So this is the consequences of the over absorption, and the next under absorbed. What is the consequence of it? It doesn't mean that if it is under absorbed, so you have a lot of benefits. It is not like this. Okay. So if your forecasted amount, you get to know that it is under absorbed, so it means that you are understating your cost of production. And for this reason, your prices decrease. So you can reverse this example if you want to understand this concept. So you can just reverse this example. Okay. So if your price decrease, so it means that it will skew your profitability of your income statement of your business. So this will happen if your forecasted or maybe budgeted production overheads over absorbed or maybe under absorbed. Okay. So what are the causes of basically of over and under absorption? So basically causes are maybe your estimation was faulty, maybe your managers not that much competitive, and maybe they don't have any ability to you can say that to estimate the right amount of their overhead cost. So for this reason, over and under absorption may be occur. And the second reason is that the faulty estimation of quantity of output and faulty estimation of bases. What are bases? So I want to take you to the previous lecture. Yes, these bases basically. These bases. These bases. Because all these bases are actually forecasted. So it means that if your basis is wrong, so it means that you will have to face these problems, over and under absorption overheads. Okay. So maybe it is because of unforeseen changes in the production capacity. Maybe your production capacity is lower at the start of the year, but suddenly it gets higher, and maybe the vice versa. Okay. And unexpected changes in the method of production. Maybe you are at the start of the year, maybe you're using labor intensive method for your production, but after some time you have to you can say that adopt capital intensive, because maybe you want to meet the demands of your customers. Okay, so if you just adopt the capital intensive method for your production, so it means that your machine hours will be greater. And you may be at the start of the year, you forecasted a less machine hours as a base, as an activity level. But after when you just adopt capital intensive production method, so your machine hours, your activity level, your bases maybe just get higher. Okay, so these are basically the reason, the causes of over and under absorption of overheads. Okay, so if you are just a student, so you can skip my video here, because I am going to talk about one more thing in this lecture, which is not related to your syllabus. But if you are hungry for accounting, and if you want to learn more things, um, like you can say that if you want to maybe learn some extra things of accounting, if maybe some questions maybe arises in your mind that what happened next, so this is for you. But if you just want to understand, or maybe just want to learn only the content of your syllabus, so we are just done with this. Okay, so you can skip the next part of this video. Okay, so what happened next? When we have over and maybe under absorbed rate, overhead rate, so what like how we treat this in accounting? Okay, so first of all, if the amount is insignificant, so we just transfer this amount to the profit and loss statement, which is called income statement short, in the AS levels or A levels or O levels, basically the Camden system. Okay, so if we transfer this amount to the profit and loss statement, so what the consequences of this? What is the disadvantage of this? The disadvantage is this, that this amount will affect our valuation, the valuation of our stock, which may be work in progress or maybe finished goods. Because, for example, if we are increasing our production cost according to our forecasted amount, so what happens? It means, for example, your actual overhead is 90, and your forecasted or budgeted is overhead is basically uh for example it is 100. Okay, so basically the difference of 10 will be transferred to the income statement. I should write P&L, the difference of 10 transfer to the PL. So so this difference will basically goes to the production cost. So it means that we are maybe decreasing or increasing the value of work in progress and finished goods. And the second method is that to treat this thing is we just carry over this under and over absorbed or absorbed overheads amount to the next year. Maybe we just make you can say the suspense account, and maybe we reverse the under and over absorbed amount and carry it forward to the next year. but this is only suitable for that type of businesses if maybe they have seasonal nature products, or maybe if the business is absolutely new. So only in these two conditions, or maybe other conditions also, which maybe I didn't mention here. So these type of in these type of situations, we just reverse the under and over absorbed amount, or we just make a suspense account for this, and we just maybe carried forward this amount to the next year. Okay, so this thing happened. Okay, so we just done with this part, and thank you so much for watching this video, and just share this video with your friends, and like maybe with your relatives also, if you can. So okay, so students, goodbye for now, and we will meet in another class for the next topic. Okay, Allah Hafiz.